Hi, everyone. My name is Anthony Crudele, and I've been trading futures for over 23 years, and I'm a member of the Chicago Mercantile Exchange. Now, in today's quick video, I'm going to share with you a trade setup that I've been trading for over 20 years, and it's all about the first trading day of the year. Now, the product I'm going to be talking about in today's video is the Micro E-mini Nasdaq futures. They are 1/10 the size of the E-mini Nasdaq futures. The E-mini Nasdaq futures are $20 per point, $5 per tick, and $16,000 in margins. Now, the Micro E-mini Nasdaq futures are 1/10 the size. They are 50 cents a tick, $2 a point, and $1,600 in margins. Now, why am I using the Micro E-mini Nasdaq futures for this trade setup? Well, because this trade setup is a swing trade setup for me that has a very wide stop in a very volatile market like the Micro E-mini Nasdaq. So I want to be able to trade something that's not super price sensitive with my risk. If I went to the E-mini Nasdaq futures with that expensive of a tick value, it would be much more price sensitive for my entries and even my exits. With something like the micros, I could actually be a lot more flexible and be a lot better risk manager. So now let's go to the chart so I can explain to you what I'm looking at with this trade setup. What I pulled up here on the charts is the Micro E-mini Nasdaq futures on a daily using a 5-day simple moving average. Remember, I said this trade is all about the first day of the year. So what do? I take a horizontal line and I draw it on the opening days of the year's high and low. So I take that range and I shade it out. That's my key pivotal area. Then I go to the 5-day simple moving average and I say to myself, if we start to get below that opening days range and we're below the 5-day moving average, that is going to be a trigger for me to get in. On day 2 this year, we got below the opening days low and below the 5-day moving average. That is a trigger for me to get short. Now, I always say, know where you're wrong before you're getting in. My stop is above that opening day's high. So now I have really 400 to 500 points of risk where I first started to enter this position, which is once again why I like the micros for this, because I could participate in this trade where if I'm using the E-mini Nasdaq, that might be just way too much risk because we had such a big range on the first day of the year. So now I'm not as price sensitive. So I can start getting short using the micros, leaning on the 5-day moving average as my guide to continue to add to this position. Now, where are my targets? I look at previous month's lows in this particular instance because I want to see if we test previous month lows and hold that as support. We went back and tested the December low. We held it. I covered a portion of my position. We went back up, as you can see here on the chart. We retested the 5-day moving average. I sold back that portion of the position that I bought near the lows. But then the next day, we opened up above the 5-day moving average and we closed above it. That then told me to cover all of my position. Why? Well, because the stop now is getting so far away with the opening range high of the year that it's really difficult for me to manage risk. We've held the December low. We got back above the 5-day moving average. For me, for all I know, this trade could be done. So what do? Because I trade this trade really throughout the year. If we start to get back below the 5-day moving average, close below it, which we did, and then we start to retest it, I start to lean on that 5-day moving average, especially in the month of January, February, and even March. A lot of times the major markets will make a range that first 1 to 3 months of the year that will actually hold for a good portion of the year. Now, I'm not predicting that that's what's going to happen, but I've seen that happen many times. So anytime we get away from that first day of the year and we could stay below the 5-day moving average, that measly, simple 5-day moving average, that could be a pretty decent trade. So now that we're below the December low, below the 5-day moving average, I look at previous month lows and say, what could we test next? And look at the October low. As I'm recording right now, you can see that we've already tested the October low, and for now we're starting to hold a little bit. This is an area where I'm starting to trim my position again. Now, what will I do? If we get back up to the 5-day moving average, I'll put that trade back on. And if we get a daily close above the 5-day moving average, I'll cover that entire position and just rinse and repeat. And to me, this is something that has really worked alongside over the past several years. Now, it gets to a point where eventually the market gets a little choppy around that 5-day and I'll step away from it. But for me, each and every beginning of every year, this is a trade setup that I'll look at and trade it pretty religiously for the first few months of the year to see what kind of range is made. And that's why I like this trade so much. Thank you so much for watching.